let's take a look at the bigger picture. Michael Bapis is here, private advisor at Rockefeller Global Family Office. Great to see you.
Great to be here. Thank you.
I would say, and tell me how you're here. People loved what happened this year, and they seem pretty excited about next year. Are you hearing that?
Yeah, we're hearing a lot of that. I mean, I think the market preceded the economy and sort of preceded when the election was going to happen. There was a lot of volatility, obviously, because the uncertainty creates that volatility. But now, I mean, I think, look, there's a lot of optimism out there. Inflation, it'll be a big numbers. There's a few big numbers coming out this week for economics. Tomorrow, the Fed meetings next week. Those indicators will be very important. But even a lot of the economic data that's coming in has been positive, you know, from the job rate to manufacturing to employment. You know, you're seeing a lot of those figures come in pretty positively. And the interesting thing is the market has finally started to rotate to more than just 10 names. You're seeing a lot of these companies in the S&P 500 start to move where previously it was just the top 10 tech names.
Well, that's what I've been hearing too, because, you know, then you start to use the contrarian indicators. If everybody gets on board and everybody's so excited, and then you have, you know, the overcrowded trade, right? It's too much.
Right.
So at what point then do you start to say, I'm going to hedge, I'm going to widen out? So, you know, are you doing some of that? You talked about rotation or maybe market breadth. Have you been doing some of that? A little bit of hedging and, you know, diversifying, right?
I mean, I think that's very important.
You do that all the time.
Do it all the time.
Right?
You know, as you know, the hedge funds, the private equity, all of the alternatives that are such a key to our clients' portfolios are the most important piece to when there's volatility, to get that volatility controlled using alternatives. And a lot of these alternatives have really started to perform nicely, even in these markets. And you haven't gotten fixed income yield for 10 years, and you're starting to get yield on fixed income too now that rates have ticked up.
It's interesting, too. I mean, when people think about the different sectors, they were very hot on tech, and you noted that, like, look, Mag 7 really drove us, but then what? What happened after that?
Look, I mean, I think tech, the rotation went out of tech. He's still in tech, but technology will always be there, as we talk about almost every time I'm on your show here. But you're starting to see the value companies that are paying dividends, and now that we know most likely the dividend rate is not going to change, it is something that people are looking for. 3, 4, 5% dividend yields in some of these companies is just, you know, icing on the cake. And I think something that we haven't mentioned that's important is the M&A activity that's going to start heating up too.
Yeah.
Because of rates, because of less regulation. You know, there's a lot of components that come with that, and people were just waiting to see what happened in the election.
I've had a lot of people talking about that, you know, that we haven't really had an administration, Lena Khan, and everybody getting in the way of deals, and that IPOs and M&A activity will really look good for 2025. Would you buy some financials ahead of that, do you think?
Look, I think there are a few different sectors. We're more obviously generalists, but I do believe that banks, pharmas, all these value companies are going to continue to do well. And if you look at earnings coming in, they've all been great with their earnings. And I just think there's some momentum behind it because regardless of the election, it's behind us now. Yeah. That's all anybody talked about for a year. And now that it's behind us, you can get back to regular activity and get back to, you know, investing.
And then, you know, at the end of a great year, you know, people sometimes don't want to sell at the top, right? Yeah. Then they have to pay capital gains. I mean, what are some of the strategies? We're going to be doing a whole tax segment coming up, but what are some of the go-to strategies that you tell? Because you have high net worth clients, you know what I mean? Famous clients. You know, what are some of the strategies that are sort of the go-tos?
That's a great question and great point. I mean, the one thing you can't do is let the tax tail wag the dog. Other than that, there's an important, you could do hedging, again, going back to the alternatives, hedge the equities. You can do rotating into something like a market neutral fund that has nothing to do with equities or fixed income. Just unique strategies that will help protect you in a down market or in a volatile market.
Right, understood. You know, when we think about what the Trump administration may bring, I mean, there's obviously this feeling that these companies are going to have a better tax-friendly administration, maybe a lower tax rate, right? But coupled with tariffs, and, you know, will the companies face higher costs? Will they have to pass those costs on to consumers? Things like that. How worried are you about the tariffs, or do you think it's more of a lot of tough talk and he'll sort of work it out? It's not going to ruin the country type
I don't
thing.
I don't think it's going to. I mean, it might change a little bit. I don't think it's going to be as extreme as everybody thinks it is. And again, the M&A activity, the liquidity that will be there because of this, and remember the estate tax provision probably will be extended, which was a huge issue for people had the election gone the other way.
Yeah, that's a death tax, basically. I mean, just call it what it is, right? I mean, that's what it is.
Right.
You can't say it, but I'll say it. I know you're being extremely professional, but that's what it is. I mean, and you've already paid taxes on that money, and then when you are deceased, then you have to sometimes pay further taxes.
Right.
When you think about, some of the conversations that you're having for the next decade, I mean, some of the themes, are you seeing AI, aerospace and defense, travel? I mean, what are some of the themes that you think might work?
AI is very important. It's only getting better. Again, the enhancement and the rapidness with which technology changes is just unbelievable. And so you have to be there. I mean, you can look at nuclear energy. You can look at a lot of different
That's
ways.
doing so well.
Yeah, I think oil will always be there, but there's many different ways to hedge against that, and new developments are coming out every day.
When you think about the consumer, I mean, I think about how much pricing power they have. We see that for the holidays, we're going to see over 3% growth year over year. So they're going to spend, but they have credit card debt.
Right.
If they're trying to get a mortgage, it's at a relatively high level still. It's come down a bit, but pricing is still quite strong. How do you think the consumer may fare?
Look, it's interesting because unemployment is still low, so the consumer is still working,
right,
and has income coming in. The inflation is probably going to hurt the consumer a bit. At the same time, these are still normalized interest rates. I'd say sub 5-6. You could still get a reasonable mortgage at that rate, and it's still not going to bury you in a home purchase or in another purchase.
And get that cash to work. Don't leave it on the sidelines. What's the final thought?
I don't think so. I mean, I think we always dollar cost average in, but cash is. You may as well put it to work.
Right, understood.
Yeah.
Michael Bapis, great to see you.
Thanks, Nicole.
Rockefeller Global Family Office.
Always
Michael
great to see you.
Bapis.